All right. What is up, traders? What's up, tycoons? So much important data to go over. I'm going to break all of it down in today's video. We're going to take a look at some interesting things about the impact of monetary tightening. We're also going to talk about what CEOs have been saying about the economy and what they think that raising rates have done to the economy. All right. We'll also take a look at the Philadelphia Fed business outlook, as well as taking a look at the leading economic index, which is remaining negative, right? Also, really interesting data coming in here on GLD, which is a gold ETF. All right, we're going to break that down in today's video. Actually, take a look at the GLD chart, okay, as well as the gold futures chart. All right, it's very important to look at, in my opinion, when you're looking at an asset class or you're looking at something to invest in, you want to look at the various funds surrounding it. So we're going to take a look at GLD and the gold futures. I also recently broke down GDX in a video, and I plan to drop a video very soon, completely going over gold and my complete thoughts on gold. All right. And of course, we have to talk about our baby here, TLT. Okay. We got to talk about TLT. And guys, I think I may have messed up. I'm going to express my thoughts in today's video. Now, of course, when I say that, I'm trying to give you guys the best leading information. All right. When TLT was up in here around 110, I was warning everybody about the gap down to $95, right? And where we could potentially go lower than 95. And I really think I messed up, and I think I got my wave count wrong. I think TLT has the potential to even come down to $80. Now, I'm not a bear on TLT, okay? I think TLT is a really good play in the future, all right? Depending on your time horizon is the biggest part, okay? If you're trying to do short-term trades, the bond market is literally more volatile than the stock market right now. You can just take a look at the MOVE, which is the MOVE index. This is bond market volatility versus the VIX. And bond market volatility has been higher than stock market volatility for quite some time now. Okay, so it's a dangerous game to play, especially if you're playing with leveraged items such as TMF, or if you're trading options and you don't know what you're doing and you don't have good risk management. It's very easy to panic in this environment. Now, my TNX chart is the reason why I'm thinking that I messed up on TLT. All right. And I'm going to break down all of that in today's video and give you guys just my true, honest thoughts and opinions. So in summary, today's video, we're going to cover weakening economic data. All right. That's what all of the data in today's video is going to suggest. All right. 2, we're going to cover gold. Of course, we're going to cover TLT and TNX. So if you want a timeline or summary of today's video, that's it. That's what we're going to get into. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. All right. I do want to mention, guys, real quick, I started a completely free newsletter. It's really amazing, giving out free, valuable content, also while giving out some free trade ideas in the newsletters. Okay. I try to give out at least 1 to 2 free trade ideas. This was one on Tesla, roughly 3-4 weeks ago. You can see the setup. I go over in description in the newsletter, and you can see that how that trade played out after we talked about the conditions. Very profitable trade if you guys trade options. Even if you don't trade options, the share price alone was a very profitable trade. Not just things like Tesla. All right. I've also been bullish on things like energy. ExxonMobil was a really good trade set up here when it was at 111. And you can see that it ended up going higher here. We're going to see if ExxonMobil actually even has the potential to hit some of our bullish price targets past and make new all-time highs. That's something I'll be monitoring. Okay. Right now, I don't think it's a good time to get on energy because, things are so high. Okay. But not every trade idea is going to be a long trade idea. We also have bearish trade ideas for all you bears out there. This was one on SWK. This was over a month ago, going over the setup. Okay, the rising wedge, looking for the breakdown. All right, and you can see how the chart played out and came down right to our targets very, very nicely. All right, sign up for that. There's a link in the description or the comment section. Also, I just want to mention that I started doing viewer requests, okay, through Ko-Fi. All right, you can come in here and request a YouTube video. I just put out the first YouTube video, YouTube viewer request from Ko-Fi. It's a platform I just started using. Not only that, you can now actually book the one-on-one coaching sessions, one-on-one personal sessions. You can get a 30-minute or 1-hour session directly through Ko-Fi, all right, coming here to the commissions page. And if you ever enjoy the free, valuable content that I put out to you guys, you can always use the buy a coffee button here to leave a tip or donation if you feel like doing so, okay? Now, we're going to get it straight into the sauce of the video now. And according to Oxford Economics, the maximum impact of the Fed's tightening will be felt over the next couple of quarters. So what we're looking at is the U.S. estimated impact of monetary tightening on real GDP. And you can see here, okay, Q4 is looking like the peak right here, okay? And you can see here, it's expected to start to decline, all right? And so we're expected to see US GDP start to decline over the next 4 quarters in 2024. Okay, so remember, the stock market tends to price out, depending on who you talk to, either 6 months, a year out, or 2 years in advance. And this could be a major reason that we've seen the market start to pull back. All right, if the estimated impact of monetary tightening on real GDP, okay, is really actually this, and we're expecting GDP to go down in 2024 4 consecutive quarters in a row, maybe that's why the market has been pulling back. Okay, now there's other factors. I've mentioned September seasonality. I warned you guys about September seasonality all throughout the later half of August, and hopefully you guys were prepared for that. So there's always different concepts and different things to take a look at and keep in mind, and this is a really good data set to look at, keep moving forward. Now, since the Fed started raising rates in March of 2022, CEOs are gradually more worried more and more about the economy slowing. Okay, and that's exactly what this chart is showing you guys. And you can take a look here. Since the Fed started raising rates, this is the CEO Economic Outlook Index, and you're looking at the overall index in blue and then the employment sub-index here in this greenish color. And you can see this has gone completely down, right? Now, look at the trajectory that this has followed and look at what has preceded or what has happened during these trajectories, right? Last time we saw something similar, 08, 09. Okay, and then we see here going down, and then what happens? COVID happens. So these are 2 recessionary periods. Obviously, COVID is going to be a major outlier because there was a global pandemic. But when you look at the trend beforehand, okay, and then you look at the trend that we had in 08 and 09, it's very similar to what we're seeing right now. If we move forward and take a look at the Philadelphia Fed business outlook, the business outlook came in substantially weaker than expected, dropping 25.5 points to negative 13.5 or 12.5 below estimates. This weakness was in new orders, which dropped 26.2 to negative 10.2. Okay. And then when you take a look at the leading economic index, it declined in August for the 17th month in a row, the longest down streak since right before the great financial crisis, since 2007, 2008. The Conference Board is forecasting a decline in real GDP growth from 2.2% in 2023 to 0.8% in 2024. What are some of the factors that can cause this? Well, we have the United Auto Workers strike. Okay, I just want to point out the obvious right here. Okay, now I'm not a perma bear. All right, I'm not here to scare everybody. I love the stock market. I think investing in the stock market over the long term, all right, is a really good way to build wealth and build retirement money. But you have to take account some of the day-to-day actions, right? And some of the day-to-day, factors into consideration. And a lot of people are traders and a lot of people have short-term mentality. So, if the United Auto Workers strike ends up extending, right? They say they're making progress in some areas, and then in some areas, it seems they're not making progress. If this extends for a really long period of time, okay, longer than people are expecting, you can guarantee 100% this is going to drag down GDP, right? There's no ifs, ands, or buts about it. It's just that simple. So the quicker we can get this resolved, then the quicker we have the chance, all right, of GDP not being affected so much to the downside by the UAW strike. All right. Now, what's really interesting is that during all of this, okay, the U.S. is essentially, how do I say this, okay, without sounding too political? All right, they're basically sending billions of dollars to Ukraine and guaranteeing funding to Ukraine, however you want to put it. We're talking billions and billions of dollars, which, if the U.S. government cared so much about its own people, right, they could actually wipe out this whole UAW strike in a matter of one day, okay, by just simply signing a bill and saying, hey, well, instead of sending this money to Ukraine, we're just going to go ahead and, not in a sense just like pump money into GM, Ford, yada, 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 but in a sense, they could, pay the workers the money that they're looking for right now with the money that they just said that they're going to send to Ukraine. All right. And that's just a fact of the matter. So, Not to get too political, that's it. All right, we're going to move on from there. All right, and talk about GLD. Okay, now GLD is a gold ETF. It saw its highest call volume yesterday since March. Okay, now this chart is a couple days old. So when I say yesterday, it is a couple days old. All right, but it's still really important that we're seeing the highest call volume since March here recently in GLD. And when you take a look at the chart, look at what GLD did. It actually dropped more. Okay, GLD has been bearish, literally pretty much gapping down 1, 2, 3, 4 days in a row. Now, I'm really thinking about buying gold here. Okay, possibly even silver, SLV. I haven't made any decisions, so of course, as I mentioned, this video is not financial advice, not telling you guys what to do, but really just expressing my thoughts here. Now, after you get a 5-wave move up, all right, it's very typical to get an ABC correction, and the reason being is because markets tend to move in 3-wave or 5-wave structures. Okay. And you can, one of the ways to help identify trend is using your Fibonacci levels. All right. So, you can't see it here, but we're basically retracing, move down, retrace, move down, retrace, move down, retrace. And we continue to respect the Fibonacci levels. And that's how you identify your trend. Okay. So here we are in a downtrend, kept respecting the Fibonacci levels. There's a reason it says bullish above right here. And there's a reason it says bearish below right here and bearish below right here. Because, oftentimes once you flip the 61.8% retracement level, either to an area of support or resistance, depending on which direction you're heading in, the odds of a 100% retracement in a reversal increase greatly. And you can see here, once we did that, back here around October, November, that's when we actually got our bullish 5-wave up. Okay, now, your 5 waves are supposed to be the impulsive moves that, give you the direction. And then your 3 waves are supposed to be the corrective moves. So we're getting an ABC here, and we're doing a good job of closing at the daily, holding our support level here of 173.16. But I'm really cautious, okay, because of these gaps down, right? These blue boxes are gaps. These gaps, they tend to fill about 90% of the time in the market historically. Okay. And I'm a little bit cautious because as soon as we flip 173.16 on GLD to resistance from support, it's very likely we fill this gap. And if gold wanted to do a complete reversal, it's very likely it would come down and fill this 152 gap. Now, when we look at the next chart, this is the futures chart. Okay. And again, just kind of showing something very similar here with a 1, 2, 3, 4, 5 up and an ABC correction to the downside. And we're doing a better job of holding our C wave lows on the gold futures chart. All right. But that's not necessarily the reason I'm looking to buy. Okay. The number one reason Exactly Trades is looking at gold is because this analysis right here has been here for a long time. All right. If you are a watcher of the channel, okay, and you've been following the channel for a long time, I bought into the metals at this point because I was looking for the B wave up. And what did I do? I sold around the tops. Okay. I didn't perfectly time the top. I waited until it looked like things were reversing and actually went down a little bit. And then I went ahead and took those profits. Now, this is not to say that I'm a perfect trader, but it's more to say that trust your analysis, guys. Whoever you are, whatever your own personal opinion and analysis is on the markets, trust that analysis and follow that analysis. And that's what I'm doing right here. Okay. So for me, even I drew this drawing right here back when we were here. So I was expecting a little bit of a bounce up, right? And you can see that price went up, and then I was expecting the move down, right, for the C wave. And that's what we did. We came down. And so in my projections, we should start to rally upwards. Now, again, the only thing that has me really cautious here is the gap down on GLD. Okay, the futures chart doesn't have those gaps. Obviously, they're futures, so they're trading on different time schedules. But when we take a look at the chart here and we point out one specific indicator, the RSI. Okay, look what happened here when we came to the oversold levels. Nice rally in the gold futures. Look what happened here when we came down to those oversold levels. Nice rally in the gold futures. Here, same thing as well. Here, same thing as well. All right, here, same thing as well. Here, same thing as well. Here, where I don't even know where this was. Here, same thing as well. Okay, and here, all right, that's where we're at right now. So if this indicator is proving to be a reliable buy indicator, okay, it's very possible that gold could start to rally back up again. Okay, now I've already mentioned the warning signs that I'm cautious of, but this is something that I potentially may be getting into that I'm looking at and I'll make that choice, right? We have some economic data coming out very soon. We have PCE, right? And that's going to affect, gold. It's going to affect all the markets. It's going to affect the dollar. It's going to affect treasury yields. It's going to affect the stock market, equities, and gold. Okay. So you don't have to jump the gun ahead of data, but these days it seems like every single data point is very important and every single data point is going to be a catalyst, and you can't try to time the market, right? So all you can do is follow your analysis, stick to your rules, manage your risk reward ratio, and follow your plan, right? If it hits your stop loss, you stop out, you take the loss, you move on to the next trade, and you find a strategy, you find something that is consistent over the long run, right? You're never going to win 100% of your trades, but if you can find something where you're winning 60%, 70%, 80%, 90%, 100% of your trades, again, you won't get 100%, but if you can get above that 50% threshold and where you're starting to consistently win more than you're losing, you want to follow those strategies. And so it's very tempting right now for me to get into gold. And I'm going to be keeping a close eye on that. As I mentioned, I may actually end up getting into silver. Silver chart looks a little bit different. I'll be doing a video here on the metals very shortly if you want my future thoughts. Now, when it comes to the big dog, okay, TLT, right? We had this price compression here for a very long time, and it really messed up our analysis. Okay. We tracked the 5-wave down. We are looking for an ABC up right here, and we thought we were getting an ABC and we were going to get this next 5-wave move down. And really what we did was we ended up putting in a triangle pattern right here. Okay. And so what we did was we got our wave 4. Okay. So this right here was wave 3. You can't see it right here, but this was our wave 3, wave 4 right here. And wave 5 actually is going to take us down to about $80. Now, I know that seems super, super bearish, guys. We're going to get into how I think that's possible in a second. But I've really gone full circle. And back in the day, I was projecting TLT to go below 90 and potentially to $80. And it really seems like a likelihood now. Okay. Now that we've actually seen it progress. And I was a little bit confused by this compression here, by this price compression. I didn't know if things were going to go up, invalidate the analysis, things were going to go down, invalidate the analysis. And now that we've, things are clear in the future, we've gotten the A, B, C, D, E triangle pattern. All right. Initially, I thought that this right here, 89.21, was going to be our wave 5 target. Now, where I messed up at is the 1618 extension that I have right here for essentially it was going to be my wave 5 is based off of these two right here. So wave 1, 2, and then I thought that we got a 3, 4, 5. Okay. I think that's where I messed up. Really, this is wave 3. Okay. This 1.618 extension right here at 89.21 is our wave 3. Okay. And we actually extended past this wave 3, which is even more bearish. All right. And the reason being is because, your wave 2, okay, is supposed to be an ABC. All right. And what we can see here is that that's very clear. It's exactly what we got, right? We got an A up, B down, C up, right? That was our wave 2 right there. That was our corrective wave. And your wave 3 is supposed to be a 5-wave impulsive wave. And so when I reevaluated things and, rather from calling this a 1, 2, basically I was trying to say that this was 1, 2, 3, 4, 5. Okay. That's where I messed up. This is 1, 2, 3, 4, 5. Okay. And so now we're actually going to be looking for a correction to the upside. We have a gap here. We also have a gap here. Okay. The gap is right about 92.60. Okay. As well as about $91 roughly on TLT. And we're going to be looking, now that we've completed the sub 5 count for our wave 3, we're going to be looking for an ABC to the upside. Okay. That's what those yellow arrows are right there. All right. For our wave 4. And that'll potentially take us up to the gap fill around 92.60, or it could stop short of there at the top of the gap around $91. Okay. Or, it could just only come up to this gap right here. So, I don't have the exact projection of how high wave 4 is going to go, but we're going to be looking ultimately for an ABC to the upside. And then at which point we would continue our downtrend and get a 1, 2, 3, 4, 5 to the downside to complete our wave 5, putting TLT roughly around $80. Okay. Now these are projections. These are not guarantees. Okay. And, the exact price levels are not going to be exact. All right. but things have followed them very well. And it's really interesting to see how things are playing out. Now, when you take a look here, we got this bearish crossover here on the MACD for TLT. This has been a really good buy and sell indicator for swing traders. Okay. And it's just been that simple. And we know recently we got the crossover here. Okay. And you can see we actually gapped down afterwards and dropped pretty significantly, going from $91 down to about $88. Not only that, I'm pretty sure in my last video, I told you guys that I actually bought TLT. Okay. And I think I bought it when it was right around here, right around this $91 price level. And I was telling you guys that I really thought it was going to come down to 89 to complete wave 5. What I thought was the larger count wave 5, but after reevaluating what I think is the sub count wave 5 for our wave 3, and now we're going to get a wave 4 and then the real 5 down. Okay. But not to get things too complicated, I did talk about how I went long here. Okay. And how I sold basically after one day. Right. And there was a lot of reasons why I sold. The main one was the daily MACD. Okay. Not only that, but we weren't holding our bullish divergence trend line here. Okay. When we had this initial bullish divergence where we're coming down and continuing to create lower lows, right? We had a low here, lower low. Okay. And then we came down, created lower lows again. We weren't really holding that and showing good signs. So, I sold after one day on that swing trade, took the little bit of profits that I could get on those options, on those call options. And it was a very wise choice because we ended up, as I mentioned, gapping down and going down much lower. And, there's no reason to rush into things right now. If you're a shorter term trader, that's what this type of analysis is going to help you out with, right? Potentially getting that ABC move to the upside. So this is a potential trade idea that you can look for over the coming week or two, is to see, does TLT have a dead cat bounce here, quote unquote, dead cat bounce? And do we start to reverse lower, right? There's not many times where TLT has been oversold on the daily chart and then gone back down into oversold territory without getting a bounce. Clear example is right here. Okay. So you can see we're oversold and then we came back down into oversold territory again, and it had a pretty significant rally. Okay. Nothing major, but about a $5 rally. All right. Another good example over here, we're oversold on the daily chart time frame. We continue to head lower. All right. We're oversold again here. And what do? We come from about 92.50 all the way up to about 97.50. So it's almost the same exact move that we saw right here. It's very possible. Okay. And it also aligning with the analysis that we do get a little bit of a bounce up here in TLT. Another thing confluing with this, or in confluence with this, is TNX. Okay. So TNX, this is where things may get a little bit complicated, but don't lose me, guys. Okay. We have a bullish channel right here. That's the first thing we're going to identify, right? We have this bullish structure. Okay. So bullish structure right here. I mentioned that we got the ABCs or correction waves, and then you're looking for, more impulsive moves to the upside. Well, what we're tracking here is a larger wave: 1, 2, 3, 4, and 5. And this 5-wave bullish structure on TNX is going to take it to 4.709 all the way up to 5.110. Now, I don't know exactly where it's going to hit in that level, but those are my wave 5 targets. Okay. And, we got the wave 1 up, and then we got an ABC correction here for wave 2. All right. And then we got our wave 3, which is going to be a 5-wave impulsive move. 1, 2, all right, 3, 4, 5 here. Okay. And then we got another ABC right here. Okay. And that was our wave 4. And now we're starting our wave 5. And what we are is when we're in wave 3 right now of 5. Okay. So we're in wave 3 of wave 5. Right. And so we got a 1 up, 2 down, 3 up. We hit the 1.618 extension. We actually extended past this, right? And so when we look back at TLT and I talk about we hit the 1.618 extension and we actually extended past it here, this is why I am now have a projection of TLT going down to 80, because I had the TNX chart nailed and I had it dialed down, but I thought that TNX going up to 4.70 or 4.88 would be what took TLT down to 89.21. I didn't think the drop in TLT would be this dramatic and this fast. So I had to reevaluate things and look at it from the perspective of TNX. And TNX has been much clearer for me, has been following my analysis much better. Okay. And just even at the initial breakout, everything's just moving together. It's so clear to me right now on TNX, right? We had our trend line here rejected. We're looking for the breakout and retest. All right. And that was supposed to be a simple ABC retest, right? And it played out exactly, guys. All right. And then we started a 1 up, 2 down, 3. And so now we've actually traded outside of this bullish structure, which to me suggests that it's a little bit overextended. Remember, I talked about TLT getting to that area where it's oversold twice on the daily time frame, and it usually rebounds after that. Well, when you look at TNX, right, look at right here where it was overbought on the daily chart. What did it do? Went up higher, got overbought again, and once it got overbought again, it had a pullback, right? And so what did we do? We came to overbought here when we gapped up. Then we went up higher again, and now we're at overbought conditions again. And I definitely see this coming back down for our wave 4. Okay, but ultimately, I think that it's going to head back upwards again for our wave 5 targets to the upside, again, between 4.70, 4.88, and 5.1. Those are going to be my wave 5 targets to the upside for TNX, and those are going to be my wave 5 targets to the downside for TLT. All right, now I know this video was a little bit long. So again, to go in summary, we broke down the weakening economic data. We took a look at gold. We took a look at TLT and TNX. I gave you guys my honest thoughts and opinions on all 3 of those asset classes and, yields and where I think that they're going. Let me know your thoughts down below. Okay, what is going to happen in the economy? What is going to happen with gold? Where is TLT going and where is TNX going? I want to hear you guys' thoughts and opinions. If you enjoyed this video, smash the like button, subscribe to the channel. Don't forget to sign up for that completely free newsletter, giving you guys free valuable content and also free trade ideas every single week. And you can always go to the Ko-Fi platform if you enjoy my analysis and you want me to do a specific video for you on a specific ticker. Okay, you can request this YouTube video on the Ko-Fi platform, as well as book a one-on-one personal coaching session. I do 30-minute and 1-hour sessions every single week. I've got some booked up for this weekend, and basically we can set one up for later in the evening next week. Okay, Monday and Tuesday are already booked up. Just let me know. Reach out to me on Ko-Fi. Sign up for the newsletter. Comment down below. Holla at your boy. I'm out.